Happy Monday, traders. I hope you all had a great weekend. And it's safe to say that volatility, uncertainty definitely has returned to the markets. And with that, the range has also opened up, and that made for a pretty good trading environment, especially in the second half of last week. And I hope that you were all able to capitalize, or at the very least, you were able to expand your knowledge and playbook with that screen time and the heightened volatility. Look, before I get into this week's watch list, I want to go over what I believe is a very important concept and topic, and that's all about managing expectations. And I think that is very relevant and applicable for the current environment, especially if it lasts a bit longer. So obviously the range expanded last week amidst increasing uncertainty after the Fed announced that rates will likely remain elevated for the foreseeable future. But in the near term, I don't expect every week, every day to be as fruitful and volatile as it was last week. So it's important for me to keep expectations in check, because if I don't, that can lead to holding positions for too long, going back to the well, over trading, and really eventually getting vastly out of sync with the overall market. So whilst last week was crazy, I'm tightening my focus, doubling down on price action, reactive trades, finding pockets of liquidity, really attractive risk reward setups, and putting my guardrails up after a lot of market leading stocks and high beta names already experienced significant momentum to the downside. So the last thing that I want to do is chase stocks lower or get short, deep in the hole. So while the majority of my focus, previous watch lists and ideas materialized really well since I began doing this, for the week ahead, managing expectations and, really going to let charts develop, find their footing again and shape up once again before I really have develop a lot more conviction going forward. So last week, I had two ideas. Palantir was one idea, CGC was the other idea. Palantir was a short idea, and that one worked out pretty well. We failed, got the lower highs, pushed below 15, and we came close to the target around 13. I'm no longer in this position, but I do think with the inside bearish day on Friday that, it is likely that this could find its way back down to 13. So still looking good, but, prioritizing my focus and mental capital. CGC, this one had the offering, dilutive news on Monday, so this one never really shaped up. The idea never triggered. Initially, I wanted to be buying dips within this consolidation that was forming, but with the gap down and offering on Monday, there was no point in buying that. So that idea just did not trigger. But look, with the earlier comments that I mentioned already, with keeping that in mind, let's go over the two ideas that I'm going to be focusing on for this week, for the upcoming week. The first one's in AutoNation. And my specific plan for this is really because for the last couple of months, the stock's consolidated below 160. So 160 has been a critical level of resistance. And in recent weeks, the stock has now began consolidating close to this key breakdown inflection level. So this bearish consolidation has formed below short-term key declining moving averages. And there's a really nice clear risk reward setup now, with 149 acting as critical support and the inflection level, and the 200 acting as a potential target around this 140 area. So I'm going to be looking to get short if the stock can break below support and see that level turn into resistance, right? So that would be around this 149, 150 area. I'll then either look, in order to get short, I'll either look for a clear lower high entry once we break below this level, if we spend some time below this level. And in terms of where am I going to set my stop loss, I'll probably have my loss if this trade materializes above the high of the day, or if we get a clear lower high on the hourly time frame, maybe around 152. And that was a pretty clear level of resistance midday on Friday. Now, as I mentioned already, 140 clear level, so that would be my target level. And with something like this, I'd expect it to potentially be a 3 to 5 day hold. Now, my second plan would be in Meta, previously Facebook, Meta platforms. While Meta last week actually displayed some pretty impressive relative strength compared to the sector and overall market. It's not out of the woods yet. As a lower high now looks to have confirmed on a higher time frame, this lower high versus the 52-week high. So I see two potential trades for Meta, kind of similar to Tesla from a couple of weeks ago. And both depend on a clean break of support or resistance, so we'll be reactive in that sense. The long idea is if Meta can break above and hold above Friday's high around this 307 area, I'll then look to go long, risking to the day's low. My first target would be potential resistance, that's around 312 area right over here. And I'd probably look to take off half of my position. And the second target would be between 315 and 320. So this is coming into this upper band right here, and potential supply and resistance zone. And that's where I would kind of use my discretion based on price action, in taking off the rest of my position if it materializes well. And look, this is going to depend on the overall market, and the overall market's direction and momentum would really depend on the momentum that Meta could see to the upside. The short idea is if the market remains heavy, and if Meta plays catch up with the overall market. So if we take out last week's low around 293, then I'm going to be looking to go short for a momentum swing trade. And for that, I'm going to be targeting 280, first level of support that this would come in if we take out last week's low, this 280-ish area. And my stop would also be pretty tight with this. I'd be risking to the day's high. So if we break below last week's low, 293, the day's high was 295, for example, that's where my stop would be. And I'd then be looking to write it down into 280s. 280 would be, my main target. But obviously I'll use my discretion based on the overall market, the momentum, the direction. If we do stay heavy and see continued downside, then I might look to implement a trailing stop in Meta. And in that case, my targets would be adjusted. But these are my two main plans coming into this week. Like I said, I'm managing my expectations. I'm letting charts and stocks find their footing again. Last week we experienced heightened volatility, so I'm definitely not going to be getting ahead of myself now, expecting the same outcome in the week ahead. Anything can happen in this market, so it's important to just take what the market gives, plan the trade the plan, and always have your stops in place, your risk defined, know where you're wrong, and good luck. I hope you all have a good week, and I'll see you next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.